What's going on, everybody? This is finally going to be the long-awaited 250k Apex sizing guide video. We're going to talk about a step-by-step process on how you should size up in your evaluation, some best practices with the evaluation accounts and the paid accounts. I'm also going to talk about ways to keep that drawdown in check, and I'm also going to be doing some giveaways for some free accounts at the end as well. I'm also going to talk about how you guys can get access to my TradingView indicators to help you guys in this funding process. So one thing to keep a note on is there are 3 different types of accounts when you guys are signing up for Apex. They have the wealth charts, they have the rhythmic, and they have the trade evades. Now, typically, for the most part, I do recommend the rhythmic accounts if you guys are using the NinjaTrader charts or the Addis charts that I like to use on the live stream. If you guys would like a very simple platform, I basically call it the Robin Hood of futures trading, which is Tradivate. Very, very simple. So if you guys are not using NinjaTrader or Addis, I recommend the Tradivate accounts. And the prices are basically the same. If you guys are using code BREW, B-R-E-W, it's 80% off right now, so you can get the 250k accounts for a little bit less than $100. And one more thing I'll be talking about at the end of the video is how I'm going to be doing rebates for the Discord and the tutoring for that price that you guys are paying for the account. But all right, let's go ahead and get started with the sizing guide here. So as I said earlier, if you guys would like to use code BREW to support the channel, you can. Let's go ahead and get started. So what we're going to be talking about in the sizing guide, we're going to talk about contract size and scaling, some drawdown rules, evaluation best practices, paid account best practices, and once again, how to get access to those TradingView indicators to help you guys get funded. All right, so starting off with the actual sizing guide here. What I typically recommend for the 250k accounts, because they are the larger accounts, this is typically the account you guys are going to use if you're struggling with the 50Ks or the 25s or the 100s, and you're really struggling to pass that account because of that close drawdown. Let me actually go back for a second, and we'll talk about that drawdown. So on the 250K account, you're looking for a 15,000 profit goal, and your trailing drawdown is 6,500. So on the 50K account, you're looking for a 3,000 profit goal with a 2,500 drawdown. So they're about a 1-to-1, a little bit worse than a 1-to-1 on the 50K, but that drawdown is pretty close for most people, especially with our current market volatility. Now, the 250K account, the risk reward is a bit worse. It's a little bit over 2-to-1. You have to make 2 times as much as that trailing drawdown. But if you are trading a relative size, a good size, which we're going to talk about obviously in this guide, you're going to be comfortable, right? You're not going to lose this account with that trailing drawdown in the matter of days, right? So if you are struggling, if you're trading too much size on that 50K or those smaller accounts, you can trade that large size on these 250Ks and be much more comfortable. Yes, you obviously have to make more money to pass the accounts, but you're going to be much more comfortable on the drawdown side. Okay. So with that said, starting out with stage 1, I recommend 10 micros, 10 MES. I do not recommend doing 1 ES, which they are equivalent, right? The 10 MES and the 1 ES, the notional value is the same, the $50 per point P&L. I recommend the 10 MES because you can size out of it. And I'm going to talk about that here in a little bit. We're going to talk about the best practices with sizing out. But you can size out multiple times, right? You can take 2 exits, 3 exits, 4 exits, whatever you want to do. But if you only have 1 ES contract, you can only exit 1 time, right? Now, the downside to this is you will be trading, or sorry, excuse me, you will be paying more in commissions. The commissions are about, I think, 2 to 3x. So if you guys are micro scalpers, if you're taking a lot of trades, those commissions will definitely hurt you more when you're trading the micros as opposed to the large contract. Okay. So for stage 1, like I said, it's $50 per point. Our goal is $3,000. We're trying to get to 253K or just $3,000 from our starting point, and that's going to be about a 60-point gain, okay? Your daily max risk is $1,000. Let's go back a little bit. The trailing drawdown is 6,500. So if your max loss for one day is $1,000, you will not blow this account up in one day. You would have to basically lose 7 days in a row, or just 7 days total, to hit that max loss. Now, obviously, that does not factor in the trailing nature of it. So you'll have to factor that in based on how much your maximum account balance is, right? This is not a normal drawdown. This is a trailing drawdown. So if your account goes up 2,000 and then you let it come all the way back and you lose $1,000 on that max loss, then obviously you are going to be closer to that trailing drawdown by $3,000. The $2,000 that you gained and the $1,000 that you let it come back. Okay. So be careful on that. So with that daily max loss at 1,000, even with it being a trailing drawdown and not a normal drawdown, you should not be able to blow up the account very quickly. It should give you a couple days of max loss before you blow up that account. Okay. And hopefully you don't blow up that account. Okay, so your goal is 3,000. So once you hit that profit goal, you go to the next stage. The next stage, I think I actually had a typo there. The next stage, the size is 15 MES. So sorry about that. There's a little typo on the bottom there. So not 4 to 6 MES. It should be 15 MES. Okay, so stage 2, you want to move on to 15 MES. Now, obviously, if you were trading 1 ES, you can't go to 1.5 ES. This is why we want to use MES for the beginning. Once you get to like 20 MES, that's when you can break it down to 2 ES contracts. Okay, so 15 MES allows us to exit multiple times. And I typically recommend exiting 2 to 3 times. Okay, you want to have one exit, which is kind of like a 1.25 risk to reward. Like if I'm risking, let's say $100, I want to make 125 or 150, right? That one would be your deleverage. You're typically going to close like 25% or let's say 30%. In this case, if you were trading 15 MES, you're going to close 5 of those contracts, a third of your position on that first exit, that deleverage exit. The reason that exit is there, it's to make you feel more comfortable on your main exit, and if you have a trailing exit for your next 2 closes, your next 2 take profits. So that first exit just makes you feel good. You're like, okay, that was a good trade. We hit our target. I feel more comfortable holding my remaining 10 contracts to my target, or I can trail that out. Okay. So you close about a third of your position, maybe a quarter of your position at a pretty quick target, 1 to 1, 1.25, 1.5, somewhere around there, right? Then you have a main target, which this one is hopefully larger than that, maybe 1.5, maybe 2.0. I can't give you guys any set in stone numbers like this because it is based on your system, right? Your trading system. Are you a scalper? Are you a day trader, right? I can't really give you an exact system unless I know your exact style of trading. So I'm giving you kind of ballpark numbers. So typically around 1, 1.25, 1.5, you exit that first little piece. Then around 1.5 to 2.0, you exit either the full position or another piece. Then if you did not exit the full position, let's say you did 5 on the deleverage, 5 micros on the normal exit, you have 5 remaining. That's when you want to keep that for a trail. And I talk about this a lot on my live stream. There's many different ways you can trail your position. You can trail based on EMAs. You can trail based on candle highs and lows. You can trail based on delta levels, nodes, whatever, right? You're going to have to figure that out with your system. Like I said, I don't know your exact system. Trading is a very personal journey, so you're going to have to figure that out for yourself. But these basic practices of having multiple exits, this is good for just about everybody, okay? So I can give you a baseline, but you're going to have to adapt it to your trading, all right? Okay, so going back to the sizing guide here, stage 2, 15 MES, $75 a point. same target, $3,000 to hit that goal of 256,000. That's a total of 6,000 after we opened the account, right? That's going to be 40 points. Same daily max risk, $1,000. All right. Our new size. So this is where you can go to ES. So you can either go to 20 micros or 2 ES. I would recommend 20 micros for most people. But if you are trading a lot, if you have a lot of trades a day, I'd say over 5 trades a day, like 5 to 10, 10 to 15, that's a lot of trades, right? So if you're trading over 5 times a day, I would probably go to 2 ES, not 20 MES. Because the more you trade, the difference in that commission is really going to be felt. You're going to feel that difference. You're trading the same notional value, but the commission is much higher. Okay, so if you're trading 20 times a day, that 20 micros, it's going to be a little painful on the commissions. They're still not that bad, but you will definitely feel it more the more you trade. Okay, so if you're trading less than 5 times a day, I would recommend 20 MES. If you're trading more than 5 times a day, go with 2 ES. The other thing I would say is if you're taking multiple exits, like 3, 4, 5 exits, if you really like piecing out of those trades, then obviously you need to take the 20 MES because you can only take 2 exits on the 2 ES. All right. All right, moving on to stage 3. Like I said, 20 MES or 2 ES. It's going to be $100 per point. You're still looking for that $3,000 goal. That's going to be a 30-point goal. And notice how the points to get to your goal are going down, right? Because you are sizing up. So you need to be comfortable in your trading because that's going to be risk up, right? Your risk is going to get higher. So daily max risk, now we're going up a little bit. So speaking of that, the risk is going to be higher because you are sizing up. So you really need to be consistent with your trading here. So to give you a little bit more wiggle room, your daily max risk is going to go up to 1,500. So stage 1 and stage 2, $1,000 daily max. Stage 3, $1,500. And speaking on this, we talked about this a little bit earlier. This doesn't take into account the trailing nature, but if you want to take that into account, you can. So what you can do is this could either just be a negative P&L, where if your P&L is negative 1,500, you're done. Or you can have a trailing daily max. So if the trailing daily max is 1,500, that means if I was up $3,000 and it came back to being up 1,500, that's my daily max risk. I'm done trading for that day. Okay. So if you want to be a little bit more comfortable, I would say do it on a trailing nature because that protects your account a little bit more. Okay. So now your new size is going to be 25 MES or 2 ES. You obviously cannot do 2.5 ES contracts. So you would have to keep it at 2 ES if you want to trade the bigs. You can't do a half of a contract. And I don't recommend doing something where like you're trading 2 ES and then 5 MES. I wouldn't do something like that. It's just a little weird. So either do the 25 MES to size up or just keep that same size. 2 ES is really not a bad size. So the P&L will be $100 per point if it was ES. It'd be $125 if it was the MES. So our goal is another 3,000. That's going to be about 24 to 30 points. Daily max risk still that 1,500. And like I said, if you want to have it as a trailing max risk, you can do that as well. Okay, our final goal. Our goal is to get to 3 ES contracts. So now on the final stage, we're going to be at 3 ES contracts. P&L is going to be $150 per point. Obviously, these numbers are very big, right? But you're trading a bigger account, so you need to be used to that higher P&L, higher risk. So our final goal is 265 because that is that 15K. If I go back to the beginning here, that is that 15K profit goal. So we start at 250, we get it to 265. Let me go back here. We get it to 265 and we're done. So stop trading. Your evaluation has been completed. So on the final stage, daily max risk is $2,000. Whether or not you want that to be a trailing max risk or just a P&L max risk, that is up to you. But $2,000, even if you do one or the other, it doesn't really matter. Your max trail is 6,500. Okay. So even if you do the regular P&L one, as long as you're not up like $3,000 before you allow it to come back, you should be okay. And you really should not be allowing those winners to come back, which is what we're about to get into. So let's talk about some rules. So drawdown rules. If you hit your daily max risk, stop trading, go down to the prior stage. Okay, so if you're at stage 2 and you hit that $1,000 in your max risk, go back to stage 1. Okay, so go back to that smaller size and then try to be more consistent with that smaller size. If multiple days losses add up to $3,000, the profit goal per stage, right? Every single stage you're looking for $3,000. That is your goal. So if your multiple days in that stage add up to $3,000 loss, go back to the prior stage. You're not consistent enough. Okay. So if you have 3 red days, 1,000, 1,000, 1,000, you obviously would be hitting your daily max risk anyway. But just to use this as a scenario, let's say 1,000, 1,000, 1,000, you go back to your prior stage because that total loss is 3,000. Okay. Size up, risk up. Just understand that as you are progressing through the sizing guide, your risk is also going up because you are trading larger size. Okay. So you need to be comfortable trading that size. So one thing we talked about earlier is taking profit in stages. You really want to ladder out. This is extremely important on these Apex evaluation accounts and honestly in any trading. Very, very important in any trading. And going back to what I said, I can't give you guys an exact system that's going to be perfect for you. Trading is very personal, but a system that is a very good baseline that I think you guys should build off of is having at least 2 exits, maybe 3 exits. Okay. If you have 2 exits, your first exit should be what we talked about earlier as the deleverage exit, where it's kind of an easy exit. It's usually earlier than you think you should be exiting. And you're going to close about 1/3 or maybe 1/4 of your position. Or if you're doing 2 exits, it's going to be half your position, right? And the reason you do that is, like I said, you make yourself feel good about that trade. You remind yourself that, hey, that's a winning trade. Let's see if we can get our main target. You feel more comfortable holding your remaining size to get to that main target. Okay. So then on your second exit, you have a main target. That big level that you're looking for. Maybe if it's a rollover top, you're looking for VWAP, right? Maybe if it's a bull div, you're looking for the OTS trail, right? Something like that. Like you have a system in place. You know where that trade typically likes to go. That is your main exit. All right. The only difference with 3 exits instead of 2 is now you have a trail. So you have a deleverage, you have your main target, then you have a trail. So maybe on a position that you've seen so many times in the past, where you closed it at your main exit and it just kept going. And it just kept going and kept going and kept going. You're like, man, I really wish I had some piece of my trade left. That's why you want that trailing exit. And typically with trails, it's going to be 1/3 of your position, obviously, because you have 3 exits. Or if you're really breaking it down, you have like 4 exits, it's only going to be like 1/4 of your position. Okay. I wouldn't ever trail with like more than half, because at that point, you really should have been exiting already. If you're already in a trailing mentality, it's probably already given you so many points that you probably should have closed half your trade already. More than half your trade, right? And speaking of trails, our next point here, don't allow winning trades to become losers. What do I mean by this? I don't mean, hey, my trade's up 1 tick, I'm going to move my stop loss to break even. That's not what I mean. What I mean is, if your trade is up to the point where you feel comfortable taking some profit off of that trade, it's hitting a level that you're like, hey, that's a good trade. Let me go ahead and take some off. At that point, you probably should not be hitting your max loss because you've already told yourself that it was good enough to take money off the table. Okay. So once it's made it to like your deleverage exit, or it's made it to your main exit, your main target, you should not be allowing that to come all the way back and hit your max stop loss. At that point, at the bare minimum, you should be stopping out break even. For the most part, you probably should be stopping out in profit. Okay. So typically what I talk about in my tutoring sessions is, let's just put a trade together in our head, just a random trade. Let's say our main target is 10 points. Our stop loss is 5 points. Okay, very easy. So if my main target is 10 points, then my deleverage target is a lot lower than that. It's probably around 5 to 7 points. Let's just say it's at 5 points, just to make it easy. Okay, so it moves up to my deleverage exit. I get out at 5 points for a third of my trade. Now we're up about 7 points to 10 points. And we're getting close to my main exit. Let's say it just randomly stalls out and it doesn't hit my 10 points. Let's say it stalls out at 9 points. And you're like, man, I only needed one more point. I'm sure this has happened to many of you guys before. So it stalls out at 9 points, it comes back down. Why should I allow something to come down 9 points back to my break even, then go down 5 more points to stop me out? That doesn't make any sense whatsoever. Because I've already told myself that I liked that exit at 5 points. And there's basically no way that that trade is up 9 points and it hasn't created a new level of some sort, maybe market structure, maybe volume profile, maybe the EMAs have moved, maybe VWAP has moved, whatever. There's almost no way that the structure of that trade, the structure of that price action is the same as when I entered that trade. So where my stop loss was originally doesn't really make sense anymore. I should be able to move that stop loss either to break even or in profit. Okay. So make sure you're moving your stop loss with the market structure. Okay, so going back to that scenario, we close a piece at our deleveraged at 5 points. Let's say best case scenario goes up 10 points. We take another piece. So now we have our trailing exit. Once again, why would I allow that trailing exit to come all the way back down to my max stop loss? That doesn't make sense because I've already told myself 2 times that I liked what I was seeing enough to take profit on my main exit and on my deleverage exit. When I was up 5 points, when I was up 10 points, I took some profit. So now I'm up 15 points and I'm trailing. I shouldn't lose 15 points all the way back to break even and then lose another 5 to go back to my stop loss. Never, never, never allow that to happen. That does not make any sense. Okay. You should not allow that to happen even if you're trading your own accounts, but it really hurts you if you allow that to happen on funding programs because of those trailing drawdowns. Okay. So that's what I mean by use your stop losses aggressively. Don't let your losers run. So aggressively using your stop loss could either be trailing them like we were just talking about, or having them like absolutely set in stone, where you're not going to be like, oh, I'll use a mental stop loss of 5 points. If it goes down 5, we'll reevaluate, right? And then you're like, oh, now it's down 10. Okay, I'll just wait for a bounce. And then you're down 15. All right, I'll wait for a little bit of a bounce, I'll get out. Now you're down 20, 30. Just don't do that. So many times in my tutoring sessions, I'll go over the members' trades, and they're really not a bad trader. Like, they're doing fantastic. What is hurting them is they'll have like one red day that has so much loss that it's wiping out like a week of their winning trades. And it's because they did exactly what I just said. They just let their losses compound and just run and run and run and run. Don't do that. Very often, the problem is not in your winning. It's in your losing. Your losses are just too big. You're letting them run too much. It's not that you just don't know how to trade. It's not that you're not finding winning trades. A lot of people are finding plenty of winning trades. They're just letting their losses get way too big. Okay, so don't do that. Another big problem is overtrading. Don't just throw trades at the wall just to trade, right? Don't take boredom trades. You need to have a consistent system. You don't have to be like overly journaling. You don't have to have like a 10-sheet Excel spreadsheet that tracks every single little detail of your trades. But what you should be journaling is like, okay, why am I getting in this trade? What kind of pattern is this? Is it a VWAP trade, rollover top, volume profile, whatever it is, doesn't matter. Whatever your system is. You should be journaling what type of system you are trading. So you can really see, okay, I'm really good at these VWAP trades. I'm really bad at these POC trades on the volume profile. So you can start to see, okay, let me focus more on these trades and let me cut these trades out. And then you start building a system around that so you're not over trading. You know what you're looking for. You're not just trading blindly. You're not just randomly throwing trades at the wall. You know what you're good at. Okay. So do some very basic journaling, and that will help you if you're over trading too much. Okay. Paid account best practices. Basically the same thing that we just said on evaluation. One of the key things I want to talk about on the paid accounts is you should be lowering your size. Okay. So in this evaluation step, we start out at around 10 micros, right? And then we build our way up and we slowly increase our size until we get to about 3 ES. Now, I know I said on the slide that you want to restart at stage 1. You don't have to go all the way back to stage 1 when you get to your paid account. But I would definitely recommend going down a little bit. Like maybe go back to like stage 3. Go back down to 2 ES or 20 MES. You want to size down when you first get into that paid account because you're going to be nervous. Especially if it's your first paid account you've ever gotten. You're going to be nervous. Okay. So size down a little bit until you feel comfortable. And then slowly work your way back to that size that you got to, that 3 ES contracts. Okay. Make sure you guys understand the rules. There are some rules that come with the paid accounts, like the consistency, the drawdown, how you can withdraw, right? How much cushion you need, all that stuff, right? So make sure you guys are reading their forums. They have really good write-ups on all of their rules. And I know you guys hear these like horror stories online about Apex not paying people out. It is a loud minority, a very, very, very small minority. People are breaking their rules and they're lying about it and they're saying, oh, I didn't do anything wrong. They're not paying me out. That's not true. Okay. Just read their rules. Once you get into this like consistency where you're just doing the same thing every day, you don't even pay attention to their rules. Their rules don't even stop you from trading normally. Okay. So just understand their rules. You'll be fine. Trade the same. Right? I did say size down until you feel comfortable, but make sure you're trading the same. What you did worked, right? You would not have passed that evaluation if it didn't work. Now, obviously that doesn't go for if you were just gambling and randomly trading and you got lucky. But if you were taking your time and you were being consistent, it obviously worked. So trade the same. Stick to what you were doing. It obviously worked. Okay. Okay. So finally, I want to help you guys get funded. All right. So if you guys sign up using our code, if you want to support the channel, code BREW, B-R-E-W, send me an email, admin@oasistrading.io. Just put in the subject, Apex indicators, or something along those lines. Let me know what your TradingView username is, and just send me the most recent Apex receipt. I'll double check you use the code. I'll give you guys access to the bots, the Momo, the momentum indicator, and the Oasis Trading Suite. Okay? And hopefully those indicators will help you guys get funded. And if you guys have any questions about those indicators, every other Monday, I do what's called Momo Monday on my stream, where we basically just focus on the indicators the entire stream. So if you guys have any questions, just come to one of those streams, or just ask me at a normal live stream, and I'll answer your questions. Another thing I'm going to be doing is a Discord and tutoring rebate. So send me a 250K account receipt that you use code BREW for. as long as it shows like how much you pay for that account, I will be giving you guys a discount code for up to $100. Okay. So I think that's about one account, because I think with the 80% off, it drops it down to like $95. So if you were looking to sign up for Discord, if you're looking to sign up for tutoring, just send me that receipt. I'll give you a discount. You'll get your $100 back, basically. Finally, I will be doing some 250K account giveaways. How to get entered in the giveaway. Sign up for these 250K accounts. Send me the receipts to my email, admin@oasistrading.io. I'm going to put you guys all into a raffle. I'm going to choose some random winners, and I'll send you some promo codes that you can use to get these free accounts. Okay? But all right, guys, that's all I have. I know this one was a little bit longer. I appreciate you guys sticking out to the end. Hit that like button. Be sure to subscribe. And by the way, this guide was on ES. If you guys would like to see a similar guide on NASDAQ, let me know in the comments. I'll think about doing a NASDAQ one as well. Now, on my channel, I mainly trade ES. We do trade NASDAQ every now and then. If you guys really want to see NASDAQ, let me know in the comments. But all right, guys, that's all I got. Enjoy the rest of your day. I'll see you tomorrow. Peace, everybody.